Yeah, let's do it. We're taking a look at volatility, of course, and we do that with Scott Bauer, who is the CEO of Prosper Trading Academy. Scott, interesting. You take a look at the migration downwards of the VIX to a 21 handle. What does that tell you?
Well, it tells me there's a lot of complacency out there, and there's a lot of expectation for the market to continue to grind higher, which, we've done over the last few weeks. And the news we've certainly seen about reopening, hopefully because of a vaccine, is good. But we're at a level now, Taylor, that we are there now at the bottom, at the absolute bottom of where we were at the start of the pandemic. And listen, there are still risks to this market. There are still risks to the economy. So I'm not saying this because I want to scare anybody, but what I'm suggesting to my clients and to people is that with a VIX this cheap, and historically it's not cheap, but it's cheap over the last 9 months, if you want to stay long in equities and long in the market for the holidays and going into the new year, great. But buy some protection right now. Buy some protection that is as cheap as it has been in the last 9 months.
You mentioned the holidays. How does this set us up as I cancel Thanksgiving and just fast forward to the Santa Claus rally?
Well, I think the Santa Claus rally has already started. I'm not so sure we're going to see the typical rally that we do the last 4 weeks of the year. This is 2020, after all. But the markets are setting up, for a continuation to the upside because there's a lot of money still chasing the gains that we've seen over the last few weeks.
Talk to me about some of the trades that you're looking at. I'm taking a look at the energy sector, Scott, and yesterday I think we were talking about having its best month ever at one point. How do you think about Exxon and some of the traditional energy players?
So Exxon and some of the other big players like ConocoPhillips, Chevron, these things have been just beaten down for years and years and years. So they have a lot of room to make up, in terms of the sector itself. And this run they've had over the last several weeks and month or so has been great. I really like Exxon because of all the big major players out there from a technical standpoint. Exxon is the one that has not broken through its 200-day moving average to the upside yet. And I think they're the one that stands the most in the next few weeks, maybe through the end of the year, to really break out to the upside.
And your trade on that?
Sure. I am buying the December 31st. So this expired last day of the year, 42.45 call spread. I can do that for about 80 cents or so. Great reward to risk. Gives me some really tremendous upside if energy continues to go here. And if it doesn't, I know what my risk is. I'm totally risk defined by my purchase of 80 cents there.
Thank you as always, Scott Bauer, for joining Options Insight today. From New York, this is Bloomberg.